Hello, I am Eyal Sivan, GM of North America at Ozone API, also known as Mr. Open Banking from my podcast. And I am incredibly proud to be hosting my friend Abraham Tachjian, a former head of open banking for Canada. I'm going to let him introduce himself and talk about where he is today. We are here live recording this as part of a special edition of Ozone API's Global Voices webinar series. Abe?
Eyal, pleasure to be here with you here again. I would say this is the highlight of my week. As you know, open banking is a professional and a personal passion of mine. My running joke is professional because I've dedicated so much of my career to it. Personal because when it comes to financial services, I'm incredibly cheap. So anything to save me money, I'm all in it. It's a pleasure to be here. I'll introduce myself really briefly, and how about right after we jump into your questions. So started my career as a lawyer, originally from Montreal. From there, I moved to Toronto to be part of my first digital bank. Ended up going to Asia to work for a British bank by the name of Standard Chartered, where I had the opportunity to transition from law more to the business side and get involved in some really cool digital products, which also opened the door to open banking. From there, moved back to Canada, joined PwC, where I had my career privilege of working with the Department of Finance to be the open banking lead. And recently, I've joined Brim Financial as the Chief Regulatory Affairs, which helps me kind of bridge open banking and my payments nerd side.
Wonderful. So with that broad bio out of the way, let's jump in. Let's start with something of a history lesson. We're here to talk about open banking in Canada. So let's start at the beginning. Open banking has been part of the Canadian landscape all the way back to 2016. Why don't you take us from then up until when you formally joined the effort in 2022?
Well, I usually find this the most depressing part of the conversation, only because it's taken us so long to get where we are. But I think it merits kind of touching on some of the key dates to understand the genesis of the concept and some of the principles that from there have translated into our policy development and the legislation. So I actually trace back the first conversations around open banking in Canada back to 2017. And at that time, the Department of Finance was conducting a consultation on the banking sector here. And I find it's a really important date because it's the first time where you start seeing references to open banking. And I think that really impacted the policy development, because at that time, when we were discussing open banking, it was not in the context of remediating market behavior, right? So if you look at other jurisdictions like the UK or Australia, open banking came on the heels of, financial institutions behaving badly or taking bad decisions, right? A redress mechanism to address poor behavior in the market, right? In the UK, for instance, there was 9 banks, which were later dubbed the CMA9, which were viewed to have an adverse impact on competition. And then as a result, open banking was implemented to partly resolve that issue. So coming back to Canada in 2017, when we start talking about open banking, it's not in the context of trying to redress market behavior or punishing any incumbent, none of that. In fact, we have the conversation around the context of empowering consumers, giving them more power and authority over their financial data to help them make better financial decisions. So although it's an old date and its relevance, may not always come up in the context of the discussions of open banking in Canada, I think it's very important because those policy decisions later on influenced how we built up the system to where we are today and incorporated some of the features that we can talk about. From there, I think the major date would be about 2020, the end of 2020, where the Department of Finance held a series of consultations with stakeholders around some fundamental questions around open banking. So this was the second round of consultation that was happening in the context of COVID. So it was conducted virtually. I had the pleasure of moderating some of those conversations with key stakeholders. So just think 40 major stakeholders and a bunch of others, I think about 50 to 100 listening in, where we were trying to really pull out what are the obstacles and what are the key features of an open banking system that should be implemented in Canada. Those discussions were later distilled into a report, which was released on August 4th, 2021, 2 days before my birthday. I like to say a lot of stuff happens in August when it comes to open banking between that first date I gave and that's one. And I think the major takeaway from that report was, number one, that you need to set up a new governance entity to oversee open banking, right? At the time, perhaps the advisory committee that was advising the Minister of Finance saw it as such a novel concept that you need dedicated resources to oversee this. But since the effort would be so high and it would take the government time to kind of implement this, the recommendation was to hire someone, an open banking lead, to kind of shepherd the industry developments while the government is working on governance. I'm eternally grateful for that recommendation because that eventually led to my nomination as the open banking lead. And I started that role in April of 2022. So as part of my function, my responsibilities were twofold. Number one, consult with the industry on some of the fundamental pillars of open banking. And those were accreditation, privacy requirements, liability requirements, and security requirements. But in parallel to that, I had to consult with government agencies, regulators as well, to make sure that everyone is aware of the conversation and in what direction it's heading, so that we can address any issues from the nascent days. That work led to a report that I provided to the Department of Finance on how to design an open banking system, which led to a series of policy objectives and fall economic statements and budget announcements, which eventually led to legislation in May of last year. Pause there for now.
Yeah, let's rewind a little bit. Tell us about the 4 working groups that you structured when you were, and I know you're not a fan of the term, but that just makes me want to use it more, the open banking czar, the term that started to go around, corralling all these stakeholders. I think the audience should hear a little more about that, because corralling stakeholders is one of the toughest parts of making open banking a reality. So talk a little bit about the working groups and how you arrived at that final product and what that final product was.
Sure. Well, look, I'll start off by saying that I don't have anything against being called a czar. I have 2 younger brothers that call me much worse. So anything I can have in terms of a positive adjective, I would take. In terms of the work that was involved there, I really think it was unprecedented in the context of the consultations that governments usually conduct, where they essentially circulate a document, collect feedback, maybe another round of consultation, and eventually have guidance or legislation. I think the government at the time acknowledged the effort required in creating a data sharing ecosystem, because the alternative would have essentially been to send everybody a draft piece of legislation, get a couple of rounds of comments and say, okay, here it is, deal with it, implement it. But I think to their credit, they noticed the effort required to create this data sharing economy, this ecosystem, if you'd like. So to accomplish that, and as you mentioned, we created 4 specific working groups. Each one of them was composed of almost an equal amount of representatives from financial institutions, banks that is, from credit unions, from fintechs, as well as occasionally consumer groups, representatives of consumers, because at the end, it's consumer-driven banking, as we call it. And so in parallel to those active members that would answer questions that we would send ahead of time, I like to joke with those participants. I warned them in the beginning that, this isn't going to be a Sunday brunch type of discussion. We're going to send you a lot of materials. We're going to expect you to come up with good answers. I don't expect anyone on those calls to be quiet. I would actually call people out who would not answer questions. So we tried to have a lot of active discussions in those conversations with that distribution. And so we also purposely kept it small. And by small, I mean, about 15 participants, because my experience from that second round of consultation that had happened about 2 years earlier was that, if you want to get to really the answers with regards to some of the core elements, you need a smaller group. You can't have 100 people opining on something. Now, the challenge there was making sure that we're capturing a large enough of the stakeholder representation in Canada, which I'm confident we did. So again, in those 4 working groups, accreditation, what are the requirements that non-banks and non-credit unions have to fulfill to have access to the system? Privacy requirements, not necessarily creating a new privacy regime, but rather how you manifest consent, how you collect consent, how you manage it. So a user experience journey around that. That was the other working group. We had one on liability, who's on the hook for something inevitably going wrong, and security requirements. So 4 working groups, each one met for about 3 hours. Each one had about 6 meetings. And I think over the span of 4 months, we completed 90% of those meetings. I think heading into the new year of 2023, we had 1 or 2 meetings left. Again, is unprecedented in terms of how fast we conducted this, the scope of the information that we were sharing with the participants. And again, all of this was distilled on a website that we held, the Open Banking Implementation website, which on many occasions I've referred to as fantastic, and I will still refer to it. And the reason behind that, I think, really spoke to credibility in the sense that when I took the role, just like today, there was many years of conversation around open banking. I got the sense that we had approached a bit of open banking fatigue, if you'd like. And so to maintain credibility with others, we really needed to be transparent and well prepared for these conversations. But we were well prepared in the sense that we would send them really extensive research and questions to answer ahead of those discussions. But on the transparency side, we published all those materials that we had discussions around, just so nobody had any concern that there's any type of backdoor deals happening. So all the materials that were shared with the participants, all the questions that we asked them, the outcomes of those discussions and the participants were all public, and they are public today. You can find all those materials still available. So I think that effort was unprecedented in terms of the output we got out of it, the transparency, as well as how fast we concluded these discussions.
Speak briefly about the final product. You've sometimes referred to it as a kind of encyclopedia of open banking. What did you leave them with?
Yeah. So essentially, we distilled the outputs of those conversations that we had in the 4 working groups. In parallel to those, we had a lot of bilateral discussions with organizations that were in those working groups as well as outside. I had also the pleasure and the honor of working with my counterparts in other jurisdictions to kind of distill and understand what had worked and what hadn't worked for them. And so from there, I published those and shared that with the government in the form of an open banking implementation framework, which would address all the questions that we had touched on in those 4 working groups. In addition to that, ancillary questions related to scope, to governance, to technical standards. By technical standard, I mean, the technology piping and how to communicate information and share data among the stakeholders. And so I assume that framework led to the legislation that the government published in 2024, but also that led to the fall economic statement of 2023, the budget announcement in 2024, as well as the fall economic statement of 2024.
So let's catch our audience up. Fast forward to late 2023. Abraham wraps up his role with the Department of Finance. On November 22nd of 2023, the fall economic statement from the Liberal government includes, for the very first time, a budget line item for what became called ultimately consumer-driven banking, the Canadian name for open banking. Then, June of 2024, Canada's first piece of actual open banking legislation is released, the Consumer-Driven Banking Act, as part of the Budget Implementation Act, C-69. The two are both published, and they both received royal assent. So, for those who are wondering, yes, open banking is today the law in Canada. We have open banking legislation. It is technically the law of the land. Abraham, what does that law say?
Great question, Eyal. Before I jump into the actual act, let's take a step back in terms of the fall economic statement. So as you mentioned, that was announced roughly about a month before my term was ending. From a personal perspective, I would say it was a validation of all the work that went in previous years in terms of consultations that I had conducted in 2020, the consultations during my mandate, as well as all the work that I had conducted with the Secretariat of the Department of Finance, which was instrumental to making this happen. It was not a solo mission from my behalf. So I always like to point out all the effort that went in from the Secretariat. Now, I'd say it's a validation because up until that point, I wasn't sure as to what the government was going to do with my work, right? But I applauded the direction we were taking in. And the fall economic statement was impactful in the sense that I don't recall another type of statement where you had such a deep dive on a policy objective like open banking. So the government went really deep into what its roadmap around open banking would be with regards to technical standards, scope, liability, security, you name it, the fundamentals, and how it would implement it. So at that time, you had a lot of Easter eggs of what's to come in the future. Now that was translated into a Budget Implementation Act, which essentially became the legislation. Now, the legislation that was initially passed last year is kind of bare, right? It's a little bare bones. It doesn't address every single element of open banking, and there's a reason behind that. The government announced that it would implement legislation in two fronts. And so we had the first piece last year. While it isn't exhaustive, it does address a lot of key elements. Number one, in terms of governance, who is in charge of open banking? Contrary to our colleagues in the South and the US, where the CFPB was empowered with governance from day one of the challenges we had early on was to determine who will oversee the open banking system. And for that, the FCAC was nominated and is responsible for overseeing open banking in parallel with the Department of Finance that will develop the policies around this. The other major development that came out of that is a function within the FCAC, a person in charge of open banking, the Senior Deputy Commissioner. Another novel concept with regard to governance. I would say the other area with respect to an impactful part of the legislation was the scope. What type of data are we sharing? What's included and what's excluded? So to that end, I think there's an Easter egg that's often missed, where we talk about open banking in the context of retail. But if you look at the legislation, Section 4, if memory serves, it targets both retail and SMEs, right? I see a lot of advocacy around pushing for SME information in the open banking system. Well, I would just point you to the direction of the legislation that already capture this. And there's context behind that. Because recall, I mentioned that the second round of consultations in 2020 happened in parallel to COVID. And at the time, when we were developing the system, I assumed the government's intent was to see how open banking can help small businesses that were incredibly impacted by COVID. So I think it's important to make that linkage as to how we got to where we are and what information is captured in the legislation. So retail and SMEs, with regards to the type of information that's captured, you've got consumer provided information, that's fancy jargon for KYC information, deposit account information, lending account information, payment account information, think about your prepaid cards, and anything else the government decides to do in the future. Now that's impactful because oftentimes we talk about Canada being behind, which unfortunately we are, and how other jurisdictions are jumping to open finance as opposed to open banking. That's a bit of a pet peeve of mine, if I'll be frank with you, because although we're a bit behind, when the system goes live, it will be more akin to an open finance system than open banking, because we're not necessarily simply focusing on checking or savings accounts. There's a broader mandate in terms of information being shared, which, if you compare to other jurisdictions, is more of a open finance system than an open banking system.
So quite the whirlwind. We'll come back to some of the particulars that were identified in the Act, but you mentioned that it was still relatively bare bones. For those who don't know, you can go find the Consumer Driven Banking Act. It comes in at about a dozen pages, and that's bilingual. So not a lot of meat on the bone just yet, even though it is, in fact, the law. More details were going to be introduced as part of Part 2 of the Budget Implementation Act, but Canada went through a little bit of political chaos over the course of 2024. I'm not going to belabor those political challenges, but the point is that the BIA Part 2 never materialized, which means that the additional details of the Consumer-Driven Banking Act that were intended to be introduced never materialized either. So what happens now? Are we going to see Part 2 of the BIA and the details of the Consumer-Driven Banking Act get reintroduced with this fall's economic statement, and then more details actually published in 2026? What do you think is going to happen?
Yeah, that's a great question. Well, I think we just found out that the budget is going to be tabled on November 4th, which is a good sign. My hope is that we finally address the outstanding elements of open banking, and we actually have a go-live date, because we've put in a lot of effort into this. We've addressed all the major questions from a consultation perspective, from a lot of bilateral discussions, and from experience from other jurisdictions, right? Open banking is not going to be the end of the Canadian financial system. It is not going to create new risks. If anything, it will address risks. And if we look at other jurisdictions, it's been safely and properly implemented. So there's good precedent in terms of the merit and the security of the system. So with that in mind, I think we're very, very well set up to finally implement that second round of legislation and have a go-live date. Now, what would that capture? Well, that's the interesting part, because as we mentioned, last year's version was a little bare bones. So we still need to address a couple of the elements from the accreditation perspective. What are those requirements for non-banks and non-credit unions to fulfill to be able to access the system? I keep using those two examples because banks and credit unions don't have to go through an accreditation process. Some of them will be mandated to participate, the banks that is. Credit unions can opt in when they would like, provided they got the okay from the provincial regulators. But essentially, you'll need requirements for everybody else to prove to be able to access the system. There's that question of liability, implementing this liability chain, as I mentioned it, where once you pass the data, you're no longer responsible for breaches related to that data if it's happening at this new data hold. And then you've got the privacy requirements. If you look at our open banking implementation page, we actually made the effort of mapping out what the user experience journey would look like. Remember, I was saying that I wanted to avoid creating a new parallel privacy regime. There's two reasons behind that. Number one, at the time, I was lucky enough to be in my role when Parliament was working on new privacy legislation. And unfortunately, that was tabled when Parliament was prorogued. But that was, I guess, the impediment around limiting what we do on privacy to actually the user journey. The second reason was our friends, the Australians, told me that, look, creating two privacy regimes is going to be really, really difficult to maintain, and it's going to be a headache. So I said, perfect, I'll take you. That's great advice. So we'll limit our work to actually managing consents. So take a look at the implementation website. I think it's privacy meetings number 4 and 5, where you can actually see the user experience journey that we discussed on how to exchange and manage consent. So I suspect the second round of legislation, or even the regulations related to those, will go a little more into detail as to what that user experience journey is. And finally, the security requirements as well. How are you going to manage data? How are you going to protect it? Who's doing what from that perspective? So those are some of the elements that are still outstanding, as well as the government nominating a technical standard, right? Before the CFPB went through its change in the US, it had chosen FDX as one of the technical standards for the system. FDX also has a presence in Canada. And so the government will have to decide who is the technical standard that every system participant will have to use in order to exchange data among each other.
Short answer, yes. You expect this to show up in the fall economic statement on November 2nd, and for these elaborations you mentioned to be introduced in 2026. Is that what the cards are showing?
That's what I hope to see. Really, I think the timing is opportune. I think we've done all the work, and I think we've seen more than enough from other jurisdictions to say, yeah, we need to do this. Now's the time.
Yeah. So you mentioned several of the principles that you worked on with your team that are now reflected in the legislation. You talked about accreditation, the selection of a standard. You talked about liability that follows the data. I bring up those two because they are distinct from the approach being taken by our friends to the south. There are a couple of other things that make the Canadian approach unique. One of them that I want to touch on, because I think it's crucial and it's a subject of much discussion in open banking circles everywhere in the world, is reciprocity. What is the Canadian stance on the question of reciprocity, which for our audience means if you consume data, which generally everybody wants to do, you also have to provide data, which sometimes folks aren't as excited about doing. What's the Canadian consumer-driven banking perspective on reciprocity?
That's a great question, Eyal. And to answer that, I'll take you back to that first date that I was mentioning in 2017, in August 2017, where the Department of Finance was conducting a consultation on the financial sector, and we had references to open banking. And recall at the beginning of our conversation, I mentioned that it's the first time we were talking about open banking in the context of empowering consumers and not necessarily punishing certain incumbents. That translates into specific features of the system, and reciprocity is one of them. Since we're trying to empower consumers as opposed to punish certain stakeholders, it's logical to empower everyone with that same data sharing right, because you're essentially acting on behalf of a consumer. You're the custodian of their data. So if a consumer instructs any stakeholder in the system to pass that information on, that bank, credit union, fintech has a reciprocal right to access that information elsewhere. So, simplest example, imagine a consumer has an account with two banks, tells bank A, hey, pass my information on to bank B because they're targeting me with a product. Bank B tells the consumer down the road, hey, I've got something for you. Let me see your data that you hold at bank A or a credit union or a fintech. That's the reciprocal right we're talking about. And it goes back to the core of what I was mentioning earlier around creating a data sharing ecosystem. I can't stress this enough. What we're trying to create is that ecosystem that serves the consumer, right? And so we have to build features into the system that empowers the consumer, but also treats the participants fairly. And so that reciprocity is one element that stems from our objective to empower consumers.
And to be clear, that's enshrined in even the current Consumer-Driven Banking Act. Is that correct?
That will come up in subsequent versions and guidelines, but this concept has been discussed on numerous occasions, including the fall economic statements, consultations that we've conducted. So it's not a new concept. It's not that it's coming out of the blue. It's well established in the policy development life cycle of open banking in Canada.
So quick recap, we have an accreditation requirement. That means there will be a requirement that certain participants will have to go through, and this will be done likely in phases, requiring them to get essentially some sort of badge that says you are allowed to play because you've met the requirements. Liability that follows the data, so it does not stay with the financial institutions. Wherever the data goes, that receiving institution is now responsible for handling it the right way and dealing with any liability related to data breaches. Hard R, reciprocity. These are all things that are different from the approach being taken by the infamous 1033 personal financial data rights regulation that the US is taking on. So for those out there who think, oh, Canada and the US are essentially taking the same approach, while there are similarities, there are distinct differences. It is, though, very interesting and instructive to sort of compare what's happening in the two regions, especially recently. I'm not going to spend a lot of time talking about the drama surrounding 1033. It is the subject of a previous Global Voices series, which you are welcome to look up and enjoy. But there is one thing that happened recently that I did want to ask you about, Abe. In the US, a couple of months ago, JP Morgan Chase announced that they would begin charging fees for consumer data access. In fact, just a couple of days ago, they reached a deal with Plaid, whereby Plaid is actually going to pay for access, despite their current 1033 regulations saying that it is in fact free. So a couple of questions there. One, to be clear, what is the Consumer-Driven Banking Act's perspective on charging for data access? And are the Canadian banks going to look at these actions from JPMC and go, maybe this is something we should do too?
Yeah, that's a good one. I'll start by saying I'm not sure whether I would qualify the 1033 story as a drama or a sitcom, but it sure is enjoyable to watch as a stakeholder. Just in terms of the history, I think one day we'll look back and say, wow, what an interesting time to be involved in open banking. So much happened, and it was a time to really learn from a financial policy perspective development. With regards to what Canadian financial institutions will react and how they will react, well, look, I'd hate to speculate, but I would say that many of them have big exposure in the US, have expanded to the US. They have participation in FDX, which is essentially a US-based, with a Canadian branch, body of technical standard development. So they're familiar with how the market develops. I think the lawsuits related to 1033 and all the discussions that have happened around it are public, right? The Bank Policy Institute, the BPI in the US, sued the CFPB as soon as the rule came out, and those materials are all public. So I'm sure they know what's going on, and I'm sure they're keeping their ear to the ground. As to how that will translate in Canada, it's difficult to say. But I will tell you that when I was in my role and I was developing the system, it was not lost on me that there's a possibility that this would go down the road of a charge for data type of system, which I did not think would be best serving consumers and aligned with the policy statements that we were trying to develop for years. Again, going back to that 2017 statement and all the discussions that the government had with stakeholders, the consultations in 2020, the second round of consultations. Throughout these discussions, we've emphasized and underscored enabling consumers and SMEs with tools to better manage their financial health. Charging for the data that supports that, in my view, would be an impediment, because it would restrict the number of organizations that would have access to that data if they were able to pay. When you mentioned Plaid coming to an agreement and whether or not this is a template, consider that Plaid is a very well-funded and hugely valued company that has the means to come to some sort of agreement like that. I question whether other smaller organizations that are as impactful in terms of helping consumers manage their financial health and make better financial decisions can pay that same amount. So from a competitive perspective, which is innate to an open banking system, right? Although you may have principal policy directions like consumer or SME enablement, innovation and competition are an output. They're secondary impacts. I think when you start to charge for the data that organizations start to share, you create an obstacle to innovation in terms of the number of organizations that can be part of this data sharing ecosystem, as well as from a competition perspective. If you've got less of those, how are you contributing to competition in the market? And so with these considerations, I was very happy to see that in the 2023 fall economic statement, with regards to the open banking policy statement under, I think, section 2.2, which discusses scope, there's an explicit reference that says that stakeholders in the system have to share the information in its original format and freely. So the government's already opined on this. And I think they appreciate the consequence of charging for that data in terms of it being an impediment to helping consumer and SME financial health, having an adverse impact in innovation and competition, and just generally slowing open banking down. And so I was glad to see it there. It was a concern of mine when I was in my position. And I'd like to see how that translates into legislation or guideline. But to your question as to what the situation in Canada is, I would point you to the fall economic statement that explicitly mentions, and the government has reiterated since, that information must be shared freely.
But the corollary to that is the current iteration of the legislation does not, in fact, enshrine that into law. Is that correct?
It's not complete yet, so you're correct, but it's not the end all. We're still waiting for a second round to implement all the elements of the open banking system in legislation.
If, in fact, the Consumer Driven Banking Act is reintroduced as part of the upcoming fall economic statement, what would you like to see the FCAC do next? What do you think they're doing right now? And how can financial institutions and other participants prepare?
I think that's a great question. In terms of preparation, look, I know that there is a tremendous amount of effort that has gone into the entire Canadian financial ecosystem to get ready for this, from a technical build perspective, from an advocacy perspective, from getting involved in working groups. There's been a lot of effort that has come into it. However, there's not a lot of use cases that I've seen in the market. There's a handful, and I often talk about it whenever I have an opportunity to talk about open banking. But we still rely on screen scraping to a certain extent. And so what I'd like to see is, in anticipation of what's coming, for organizations to start spending less time on the advocacy and the technical build side and start thinking more about the products that you can build on open banking. Because I often say that if you look at open banking in Canada simply as a compliance function, you failed already, right? There's a tremendous opportunity as an organization to better serve your customers and to come up with new innovative products. And I think, there was a great article in The Logic a couple of months back talking about the efforts the National Bank has undertaken to share data that their consumers have and the benefits that come out of that, even for them. So I'd encourage you to read that Logic article to kind of understand how organizations can move beyond simply looking at this from a compliance perspective and start getting ready for something that is coming and something that benefits their clients and themselves, right? On the one hand, you're empowering your customers to fulfill their wishes, but on the other side, you could also take advantage of it from a reciprocal perspective, right? So start thinking about the benefits, the opportunities, as opposed to the obligations. The obligations are important, don't get me wrong. I'm not saying to ignore it. But if you limit your approach to this simply to a box-checking exercise, I think that's disappointing, and you're missing a huge opportunity, both for yourself as an institution and to better serve your customers. With regard to what the FCAC will do, I know they've been preparing very well. They've been quite vocal on the conference circuit. I think there's good representation there, which gives the market, comfort to say, look, we're involved, we're going to work with you, and this is a priority of ours. And by that same token, I think nominating the Senior Deputy Commissioner for Open Banking is also a big step that we can take as a country to start moving open banking ahead and pushing that conversation forward, kind of like I did in the open banking lead role, where the government was doing its job, I was doing mine. I think having the Senior Deputy Commissioner in place as the government is working through legislation really kickstarts the whole process.
So let's double click on a couple of elements there. You talked about the mindset shift that financial institutions need to go through, thinking beyond compliance, thinking about this as an opportunity. Obviously unbiased, but I wholeheartedly agree. Materially, from a technology standpoint, what can financial institutions and perhaps those fintechs looking to act as data recipients, looking at this hard R reciprocity, what can they do on the technology side to start to shore up their readiness?
Yeah. Well, I look at this from a couple of angles. First, from the technical standard perspective, and As I mentioned, the government needs to nominate one. FTX is, to my knowledge, the only one present in Canada. So that would be a consideration in terms of determining what you're doing with FTX. Are you becoming a member? Are you implementing the spec? That's a decision that every organization will have to do. But from the other perspective, you have to look at open banking in terms of a door to your house, right? When someone comes knocking, you have to be able to answer, invite them in, lead them into the room that you want them to see only, right? Away from the basement where all the kids' toys are. And so I look at it from a similar perspective in the sense that make sure you have an API portal management system in place, make sure that's configured with the proper governance, with the proper documentation to invite counterparties, to build towards your API, to experiment in your sandbox. So there's a tremendous amount of effort that needs to be undertaken from that front of the house perspective, right? To have that door ready to admit people into your ecosystem, a closed ecosystem that only shares information with regards to that scope, but also looking at how you can go beyond the open banking system. I'll go back to my previous note in terms of not limiting this from a compliance perspective, right? Looking at the opportunities. The legislation says what type of information you have to share in that context, but it doesn't forbid you from sharing other types of information outside of the system. So once you put in all this effort to create the technological infrastructure, start looking at what data falls outside of the scope of the system that you can use to refine your products, to even monetize open banking. So there's just quite an amount of effort that needs to go into this from a technology perspective, from a product perspective, from a data management perspective. So I know a lot of organizations have given this some thoughts. From those who haven't, I would encourage you to start looking at the opportunities and build backwards in terms of seeing what technological infrastructure you need in place to make that a reality.
Let's make it personal. What's Brim doing?
Great question. So look, like every stakeholder in the market, we are encouraged by how open banking is developing in Canada, and we're waiting to see what the second round of legislation will deliver for us to be able to participate in the open banking system. But we're supporters, as my role here at the organization attests, and that's why I joined. I know Brim was a participant in the working groups when I was running them. And so we're like everybody else, we're working on our plans at the same time, waiting for the government to finalize the second round of legislation.
Zooming out, Canada has been on this road for almost 10 long years. Is this delay an advantage or a disadvantage? Is moving slowly causing us to fall further behind other jurisdictions, or does it offer us an opportunity to learn from these global experiences?
Yeah, that's a good one. For years, we would qualify our pace as one of a fast follower. I don't think that's valid anymore. I think at this point, we're just a follower, which is okay. It is what it is. We'll deal with our system in our own way. But I think that brings some benefits in terms of learning from what others have done to avoid their pitfalls, but doubling down on what worked for them. I know when I had the opportunity to speak to my counterparts in other jurisdictions, that's what I really focused on, to extract what really worked well for them, to implement that in Canada, and to try to avoid a lot of the pitfalls that disadvantage them. Now, that only goes to a certain degree, right? There's a point of diminishing returns because this is becoming a relatively mature system. Right? You look at Australia and the UK and many other jurisdictions around the world, it's not a new novel concept. Right? So there's only so much we can learn before we actually, step up to the plate and take a swing. So regrettably, it's taken us a lot of time to get here. There's reasons behind that. COVID surely did not help the policy development here. Political changes surely impacted this as well as a variety of other reasons that I don't think it's necessary to dwell on. It is what it is. We are in this situation. But to your point, we're followers at this point. I think we've learned all that we can learn from other countries in terms of how to implement it. It's now up to us to actually, take the swing, implement the system, experiment with it, evolve it onto other scopes in terms of looking at payment initiation, looking at actually doing something with the information, moving stuff around. And I think there's parallels to what's happening in Canada with regards to the development of the RTR and the progress Payments Canada has made there, the policy development exercise that they're undertaking. I really see that as a benefit to where we are here in Canada, because one of the things that maybe I omitted to mention is that when the system goes live, it'll be limited to data sharing only, right? What we typically call a read system, read access only, where a stakeholder goes into a data holder's ecosystem and just retrieves information, but can't actually move money around or initiate payments. That's another phase. But I think that phase will be magnified when we have the real-time rails for both systems to work in parallel. So I guess what I'm trying to say is, although it's taken us a lot of time to get here, and although we've learned as much as we can learn, I think when we implement the system, the timing is still opportune in the sense that there's other projects that open banking can leverage. And I don't think Canadians have lost interest in open banking. I love to say that consumers don't care about open banking. It's just me, you, Eyal, government officials, and people in the system, people listening in on this call. And I don't say that to discredit the concept, but rather consumers just care about the capabilities that data sharing enables. And from that perspective, we've got some capabilities in the market. And I think the government's research back in 2021 or 2020 showed that 9 million Canadians exchange data without knowing that it's called open banking, right? Or screen scraping, whatever you want to call it. They share their information to leverage a variety of products that are on the market. And if I was a betting person, I'd double down and say those numbers have increased significantly since 2021 because, there's new products on the market and their value just keeps increasing in the context of tough economic times. So I think we're well set up for this to happen.
Yep. A wonderful discussion. We're going to spend the remainder of the time going to some audience questions that have been submitted in advance. I wanted to clarify one thing. I keep saying maybe the folks out there don't know. We have a lot of international listeners. I am myself a proud Canadian. Abraham and I have the pleasure of meeting in person pretty regularly. So I have to say I have a personal interest in making sure Canada gets this right. And of course, Abraham, we could not have done that so far. We could not be doing it as we go forward without the efforts that you put in. So on behalf of all Canadians, I'd like to say thank you. Let's go to the questions that we received in advance. There's only a handful, and frankly, they all have to do with the US, except one, no surprise. And I'm going to bundle a couple of them together. But there's one in particular that I'd like to start with, because it does something I thought about doing when you answered earlier, and I didn't. And that is challenge you on the answer you gave to the JPMC charging for fees question. Now, I'm going to read this question verbatim because clearly whoever wrote it put a lot of work into the wording. So here we go. Quote, do you believe it makes sense for open banking fintechs to cause so much damage to the IT systems of JP Morgan, all while never footing the bill for their consumption, in brackets, data harvesting, let alone paying properly their supplier for their consumption, just like any other company into any other industry legally has to do? A pointed counter argument. What do you think of that?
Well, I would question what type of IT damage we're referring to here. As I mentioned, when you look at many jurisdictions throughout the world, open banking or data sharing or whatever adjective you want to call to describe this right is done in a safe and secure manner. To my knowledge, there is no IT damage, no privacy breach, no breach of any kind stemming from an open banking system. Now, participants may encounter breaches just like anywhere else in the world and any other service. But number one, I question what this IT damage is. With regards to the fairness of the ability to charge, well, as I mentioned earlier, our policy directives are different from the US, right? There's more of an active tone of punishing organizations that are rent seekers. I think that's the term Director Chopra has used in the past when he was referring to incumbents in the market, and a system designed, to address that type of relationship. We don't have the same here. So I think when you're looking at the Canadian system and whether or not what happened in the US should apply here, and with organizations being able to charge for the information, well, that organization has the same right to pull data from a counterparty. So it's not like a bank in Canada is setting up a system that is entirely detrimental to them. Quite the opposite, actually. And I think that's where this question misses the mark, in the sense that any bank that implements this system has the right to pull information from other parties as well. How you actually monetize it, how you offset those investments are up to you, right? Because that's what running an enterprise is. You invest and you can try to find ways to actually capitalize on your investment. And that's what I think our system allows, contrary to maybe others, in the sense that I emphasize this point. Don't look at it purely from a compliance perspective, because this is the boat that you will be in. You will view it as simply spending money to allow a competitor to take your clients away.
Yep.
But you have that reciprocal right.
That's exactly what I was going to add. This hard R reciprocity really changes the equation. That's not something that was in 1033. So for the person who asked that question, think about that. That means that the banks who are saying, well, wait a minute, you're coming and getting this stuff for free and not charging, and I'm unable rather to charge you for that data access. You got the reciprocity. That means that fintech who is taking the data, harvesting the data, in the words of the question, you can harvest them right back. So it is a different situation in Canada. It's going to be fascinating to see how that particular aspect plays out. Several of the other questions have to do with the impact of the disruption in the US on Canada. Do you feel that what's happened in the US, both in the context of Section 1033, but also in the larger context of the strained relationship related to tariffs, et cetera, has that had an impact? And what is that impact on the rollout of consumer-driven banking here in Canada?
To be frank, I haven't seen any impact here in Canada yet. As I mentioned, the FCAC is still dedicated to this. The commissioner has been at conferences speaking about open banking in the context of the Trump administration and all tariffs. I'm not saying she was speaking about that, but she's still out in the market talking about open banking, which I view as a positive. And so I haven't seen anything that has adversely affected the development of the system. I think there's still advocacy. I know there's organizations still building products around open banking, getting ready for the system to go live. So I don't think it has adversely affected it at all. If anything, I would say it's strengthened the argument for it, in the sense of, putting pressure on the economy, creating challenging economic times for consumers who could benefit from the planning and the financial wellness tools that open banking promotes. So if anything, I would say conceptually, it created a better environment for actually making this happen.
Let's go there. Is that, in fact, the case, that the challenges that the relationship is now facing have accelerated the efforts to move towards consumer-driven banking in the context of the broader message from Prime Minister Mark Carney around nation building and infrastructure building and so on? Do you think perhaps that's the case?
I love that question, Eyal. I got to tell you, because we're at this opportune moment where we've realized that the fundamentals around our economy have changed, right? Our biggest trading partner doesn't see us as a friend anymore, treats us differently, and we're at a point where we need to reevaluate our conceptions about what our country is from an economic perspective, from an infrastructure perspective, from big swings perspective. So I think it falls into the narrative of revisiting everything, whether it's building pipelines, whether it's building big projects, or anything related to reimagining the Canadian economy. Now, although this concept is old, like I mentioned, it's still an opportune moment because it aligns with the objectives of what we're trying to accomplish from a nation building perspective. It aligns with the goals of expanding our economy, better serving consumers, giving them tools to better manage their financial health. I think from that perspective, we're right on time.
The final question that we received in advance, I think, will make a great closer. And that is, what educational tools are available to consumers and FIs to help them understand and drive consumer-driven banking efforts faster here in Canada?
Well, I would be remiss not to mention your podcast, Eyal.
Thank you.
There you go.
Listen to Mr. Open Banking, everyone. And of course, I'm going to just out and say it. You were listening once again to Ozone API's Global Voices series. If you are interested in open banking, we have many other episodes and resources that can help you understand open banking in Canada and, frankly, everywhere else. But please, Abe, where else can they look? You mentioned, for example, the information you published as part of the working groups that is still publicly available.
Absolutely, absolutely. I think if you just Google open banking implementation, you'll find it eventually. You know, all the material is there, all the context that we provide in the discussions, the questions we asked, and the outcomes of those questions. It's all there. So I would point you in that direction. The Australians and the British have some good videos around open banking for consumers. They've got some good material to understand the concept and how it could benefit you. So I would point you in that direction. The FCAC has materials around financial literacy, and I'm sure there'll be more around open banking as well. So I think it's just a question of Googling, or even better, ChatGPT it, or Perplexity, or any other LLM. There's plenty of material on the market for you to upskill yourself as a professional or otherwise.
Wonderful. And that brings our discussion to a close. Thank you, everyone out there, for joining us for Ozone API's Global Voices series. Abraham, thank you. It's been a wonderful discussion. No surprise at all. We look forward to seeing you at our next webinar.
Thanks, Eyal.